Good day, junior tickets. I'm Mrs. Brimacombe. We are going to look at adjustments, where the focus is now going to be on salaries and wages. This is a topic that you've learned in grade 10. In grade 11, this forms part of year-end adjustments. Now, just to go back to basics, if we look at the gross salary, this must always be posted to the salaries and wages account, which is an expense to the business, minus any deductions. Any deductions must go to that specific fund account, which is regarded as a liability. Examples of this is SARS, pay-as-you-earn, medical aid, pension fund, UIF. So gross salary minus deductions equals my net salary, which will go to creditors for salaries and wages. This is a liability to the business. So all of these accounts, the fund account, the creditors for salaries and wages, will appear as part of your current liabilities in trade and other payables. Note number 9. Now, a business can contribute towards the medical aid pension fund. They must contribute towards the UIF. Any contributions must be added to the fund account. This is an expense to the business. So remember, the fund account is a liability, the contributions is an expense. What we owe towards that specific fund account will consist out of that which was deducted plus the contribution. Now please remember, a business do not contribute towards an employee SARS pay-as-you-earn. Skills development levy, that is always contributed by the business but is never deducted from the employee's salary. Now, if we look at different types of adjustments, these are just examples. It can happen that employee's salary is omitted. An employee's salary is omitted, the salary increased with a percentage. The employee received an increase. The salary was recorded, but without the increase. An employee retired, and the bookkeeper added the salary. So remember, when we make corrections, this happens in the general journal. If we look at an example, a salary which is omitted, it means that the gross salary should always be added to the salary account. Any deductions will go to the fund account. Gross minus deductions equals the net salary. Contributions is an expense to the business. So if it's omitted, it means we need to add it. Where do we add it to? The fund account. If we look at a retired employee, it means that it should be taken out. So our expense will decrease. Account credited, salary. Account debited, the fund account, our liabilities will decrease. If we look at the contributions, the expense account will decrease, it will be credited. It means that the fund account will be debited with the contributions, our liability will decrease. Gross minus deductions equals the net salary. So our creditors for salary, it will be minus. Now, if we look at activity 9, what is required? Complete the following ledger accounts in the general ledger. So we have to complete creditors for wages, SARS pay-as-you-earn, Provident Fund, Unemployment Insurance Fund, wages, Provident Fund contribution, UIF contributions, and then question number 2, calculate the amount owed to Gerald on the 30 June 2021. If we look at the adjustments, adjustment number A, the wages of 4 employees were not collected for the week ended 30 June 2021. It appears that these employees no longer work for the business. So this means it must be taken out. If you look at adjustment number B, one of the employees, Gerald, received an increase of 2,500 for June 2021. The bookkeeper omitted the increase for his June salary. However, with the partner's permission, he had taken trading stock at a cost 980. The difference will be settled by the business in July 2021. This is now an example where an employee's salary increase was omitted. Extract from the pre-adjustment trial balance on 30 June 2021, wages had a total brought forward. It's an expense which will appear on the debit side. SARS pay-as-you-earn is a liability, so it's balance brought down on the credit side. Provident fund is a liability, so the balance brought down appears on the credit side. Unemployment insurance funds is a liability, so the balance brought down appears on the credit side. Creditors for wages is a liability. It means that the balance brought down will appear on the credit side. So adjustment number A, the wages of 4 employees were not collected. So if we look at the basic wage, it's a question mark. The gross wage will always be recorded in the wages account. Now this must be taken out, but now that is a question mark. The pay-as-you-earn deduction, that money is owed to SARS. Pay-as-you-earn, remember now, these employees, it must be taken out. Therefore, SARS pay-as-you-earn is going to be debited. It is the pay-as-you-earn deduction per employee times 4. So for every credit, there's a debit. If we look at the Provident Fund, the total deduction is 250 per employee. We have 4 employees. For every credit, there's a debit. UIF deduction is 78. So the unemployment insurance funds is going to be debited with 78 times 4 because we've got 4 employees. Now the net wage was given to you, 6,302 per employee times 4 means that is the total amount that must be debited to creditors for wages. Our liability will decrease. Remember, we have to take it out. To find now the gross wage, which will appear in the wages account. If the wages account is credited and the rest is debited, it means that we have to add everything on the debit side, and that will equal the gross wage. It means that we have to add the creditors for wages plus SARS pay-as-you-earn plus the Provident Fund deduction plus the UIF deduction. So if you look at their payslip, if we would have taken the net plus equals the basic wage and we times it by 4, we would have gotten the total gross wage, 31,200. Wages can now be closed off. It's an expense. So where do we close this off to? The profit and loss account. Take everything on the debit side minus that on the credit side. And this is my total expense for this accounting period. Creditors for wages is a liability, which means it appears in the balance sheet account section. So at the end of the accounting period, we need to close this off and calculate the new balance. Take the credit side, minus the debit side, that equals the balance carried down, means balance brought down. So we have only looked now at the deductions. Now we need to look at the contributions. Now it says that the employer contributes on a rand for rand basis towards the UIF, and for every 1 rand deducted towards the Provident Fund, the business will contribute 2 rand. So the contribution is an expense to us. Because we need to take it out, it means we need to credit it. So the Provident Fund contribution is going to be credited with 2,000. We have to say 250, because that is which is deducted, times 2, because for every 1 rand deducted, 2 rand is contributed. And how many employees do we have? We've got 4. So the Provident Fund contribution is credited, account debited, the Provident Fund, our liability, is going to decrease. The UIF contribution, it's on a rand for rand basis, which means if 312 is going to be deducted, it means that 312 will be contributed. Now remember, we have to take it out, which means that our expense account is going to be credited, account debited, unemployment insurance fund. Now, if you look at adjustment number B, one of the employees, Gerald, received an increase of 2,500. The bookkeeper omitted the increase. So if it's omitted, it means we need to add it. However, with the partner's permission, he had taken trading stock at a cost price of 980. The difference will be settled by the business in July. Details of his salary. So the basic salary with the increased amount is provided. Pay as you earn deduction, UIF is 1% of the gross salary, the basic salary. The net salary is a question mark. The employer contributes on a rand for rand basis towards the UIF. So if we now look at the pay as you earn deduction, 180, this must now be added to the SARS pay as you earn, which means that our liabilities will increase with 118. Now we can close off the SARS pay as you earn, take the credit side, minus everything on the debit side. That equals the balance carried down, means balance brought down. Now, if we look at the UIF deduction, it is 1% of the basic salary, which means 2,500 times 1% equals 25. This must now be added to the unemployment insurance fund. This is a deduction. The business contributes on a rand for rand basis towards the UIF, which means that UIF contributions will now be debited with 25, account credited, unemployment insurance fund. The Provident Fund, it's in the balance sheet account section, it's a liability. We can now calculate the new balance, take the credit side, minus the debit side, that equals my new balance, balance carried down, means balance brought down, which is 25,000. If we look at the Provident Fund contribution, this is an expense account which must be closed off, where to the profit and loss account, take the debit side minus the credit side. The difference is my total expense for this accounting period. Unemployment insurance fund is in the balance sheet account section. It's a liability, so you have to calculate your new balance. Take the credit side minus everything on the debit side. That equals the balance carried down, means balance brought down. UIF contribution it's an expense account, which means it's closed off to the profit and loss account. Take the debit side minus everything on the credit side, and that equals my expense for this accounting period on UIF contributions. If we now look at question number 2, where we need to calculate the creditors for salaries. In other words, what do we owe our employee, Gerald? The net salary is a question mark. So how do we get the net salary? Gross minus deductions equals the net salary. So creditors for salaries is credited. The employee took trading stock with permission from the owner. It means that my trading stock is going to be credited with 980. Account debited, creditors for salaries. If I now take the credit minus the debit side, that is the amount which we owe our employee, Gerald. Thank you very much. Next, we're going to look at activity 10, trade discount. I want to leave you with this quote. Study hard, no matter if it seems impossible, no matter if it takes time, no matter if you have to up all night. Just remember that the feeling of success is the best thing in the entire world.